Hey everyone, welcome back to another video. In this video, I'm going to be talking about today's CPI report, which is going to be a huge market catalyst. It's currently 6:30 in the morning, and the CPI report comes out at around 8:30 this morning, a little bit before market open. And I kind of just wanted to talk about how I'm preparing for it, what the possible outcomes might be, and yeah, because this is a pretty influential, market mover. So I just wanted to start by looking at the predicted outcomes by JP Morgan. So the expected outcome on the CPI reading by most people is 6.4 to 6.6%. As you can see, JP Morgan puts a 65% chance of that happening, and the reaction on the S&P at about 1.5 to 2% up. So that is very likely to happen. And then you can see if our CPI reading comes in below 6.4, which is a pretty low probability, then the markets will rally pretty heavily because that shows inflation is really falling off. And then if it's anything above the expected 6.6 range, which has an even lower probability, then they think the S&P will go down 2.5 to 3%. So I just want to say that regardless of the outcome of the CPI report, my portfolio is well hedged and well ready to go, and I'll explain why in this video. So to start off, you'll notice that my portfolio is up quite a lot since the last video, and I won't be going over my portfolio for the week until Saturday like I normally do. So for now, we're just going to ignore that fact. But we're just going to look over why I feel like I am personally very well hedged against this. So let's start with my call options and my stock holdings. So currently, as you can see, I have two in-the-money call options on both Ford and Hood. And on top of that, my Palantir position is $2 away from being in the money as well, which means that all of my shares would be called away at the strike price that I set. So if we look at a chart here, hold up, let me bring up Trading View. If we look at a chart, you can see this is Palantir stock. You can see this green line here is the call option, the strike price that I sold my call option at. And you can see how close that price is to getting above it. And then if we move over to a Robinhood stock, which I'm also holding, you can see that they are well above my sold call strike price. So the price is currently $8.76. My strike price was $8.50. So these shares are pretty deep in the money at the moment. And lastly, with Ford, you can see these shares are really in the money. So I sold the call at the $12.50 strike price, and we're currently at $13.22. But let me tell you that I'm okay with selling my shares at all these prices. And what's good about this is it actually creates like a delta hedge. So if I look here at my options exposure on TD Ameritrade, you can see that even though I have 100 shares of all these stocks, my positional delta is actually really low. So on Ford, for example, my delta is only 25. So for every dollar that Ford moves as a stock, I'll only lose or gain $25. And that's because I have that call option that essentially has a negative 75 delta, and my shares that have a 100 delta. So it just hedges my position pretty heavily. You can see here. Same with Robinhood, only a 38 delta. And lastly, Palantir with a 49 delta. So that means that if the stock market rallies, then of course I will make money, and then my shares will be called away. If the stock market loses value, then I'm over 50%, sometimes even 75% hedged against that, and I'll make money on my call options. And for these stocks to fall enough to where I won't be assigned, they would have to fall a pretty significant percentage here. Yeah, about 6% for me to not get assigned. And you can see my expiration date is basically next week. So there's not a lot of time left on these options. And like I said, I'm okay with getting assigned here for a couple reasons. And I'll bring that up over here. So if we look at my current profit and loss overall, you'll see that I'm only down about 4.16% overall. I'm back to beating the S&P by about 0.5%, and my actual P&L in dollars is only down $162 overall in my portfolio. But if all of these call options were to get assigned here in my positions, hold up. Oh wait, I gotta go to asset type, hold up. So if all of these call options got assigned, then I would actually end up making another $86 on top of my current P&L, which would leave me with only a 2% loss overall on my entire portfolio. Now, I think that is really good because I think if I get assigned on all these positions, my profit and loss will basically be at break even, and I can use the knowledge I've learned from wheeling all of these stocks to more safely essentially bring in income. So I'll tighten my trading strategy and become a lot more safe with how I trade. So hopefully with the CPI report, regardless of the outcome, I'll have all my shares called away and I can sort of restart fresh, if that makes sense, and I can slowly build up my portfolio into the green over time. So yeah, and if we look at SPY real quick on TradingView, you can see we're pretty much entering this top of the range here. So depending on how the CPI report comes out, this could be really influential. You can see it's only 0.89% from hitting this upper range that I have drawn here, which hits a lot of major resistance points along SPY. And you can see for the last CPI report, we actually hit that, and then we ended up falling all the way back down. So we'll see how this reacts. But like I said, guys, I feel like I'm very well hedged for any kind of outcome that happens on this CPI report. And I'm just really hoping that all of these get called away, and I can basically start over fresh and build up my P&L from there. So yeah, I just want to make that quick video, and then on Saturday, so in 2 days, you'll see how the CPI report affected my portfolio, how it affected all of my options, and I'll go over basically what happened with all that. So yeah, good luck to everybody in the CPI report, and we'll see what happens at 8:30.